Natco Pharma is an Indian pharmaceutical company worth around 18,540 crore rupees. It's a pretty that's a pretty massive size, and it recently released its earnings for quarter four, fiscal year 2025, and also the transcript for the earnings conference call. So let's take a look at the latest quarter and some of the things that were said in the latest con call. So first, let's take a look at its latest earnings. All right, quarter four, fiscal year 2025, revenue of 12,873 million or 1,287 crore rupees compared to quarter four, fiscal year 2024, which had a revenue of 1,110 crore rupees. So growth there. EBITDA margin was 47.7. Moving down, profit after tax increased from 386 crores in the last year's last quarter. So quarter four of fiscal year 2024 to 406 crore rupees in quarter four fiscal year 2025, and a profit after tax margin of 31%, 31.5%. So what was said in its latest earnings call? So this is the transcript or these whatever was said, it was recorded on this or written on this piece of document. So first, okay, we'll move here. Yes. Now, the first thing, the company estimates a possible dip in revenue by 20% and profits by 30%. So it anticipates a dip in revenue, a decline in revenue by 20% and decline in profits by 30% in next year due to geopolitical uncertainties and pricing pressure in its core product portfolio in the US and increased R&D expenses. This core product portfolio in the US mainly refers to its blockbuster drug Revlimid, Revlimid, whose patent is actually expiring, and so other companies are now going to enter that market. Natco did not develop Revlimid, but it was one of the few companies allowed to sell its generic version. But now the patent is now expiring, I believe, in January of fiscal year 2026. So now other companies will enter into the Revlimid market, Revlimid, and yeah, that's why they're saying that there's going to be pricing pressure and revenue decline in its core product portfolio in the US. Okay, now this is one of the products that they're thinking of launching, Rice D Plum, Rice D Plum, and the person, let me just see, Mr. Rajiv Nannapaneni, who's from the company Natco, he says, on Rice D Plum, I think we believe if it all goes well, it will be reserved for order by end of this month. So they are currently having a court hearing as to if Natco can actually launch the generic version of Rizdi Plum in India. So they think that they say that there's only one last court hearing left. Only one last hearing left. I think it will get done today, or maximum, hopefully, you'll be able to close everything by the end of this month. So they expect an order in maybe post holidays in June, as Delhi High Court is closed. June or August. Sorry, July, August. Okay, they expect some order in July and August area. And right now they have not launched the product. They're waiting for the clarity from the judge, and then based on that, they will strategize. So the analyst asks that if the order comes in their favor, the court order, how many months do we look at the launch? And he replies that if the order is in their favor, then they can launch immediately. So if the court order goes well, they will be able to launch their product, the generic version of risdiplam, which they think is going to be very important for them. Okay, moving on, we have this. Yes, to make myself smaller. E- yes, I hope it's clear. So Natco Pharma has this crop health science division. So one of the revenue segments is the crop health science related to, I guess, agriculture chemicals business. Crop agriculture, crops, and chemicals related to those. So the segment has really not done well. So there's some more clarity on this business. Now, it said that the agro business has not done well and it has not even met their expectations, but it is what it is. Now, this year, we feel we're going to hit that critical mass where we will start breaking even. Very important. We are doing around 130, 60 crore net revenue last year, and they think they need to hit around 160 to 170 crores to have that EBITDA positive. And he thinks hopefully they will hit that number this year. And if they go beyond that, they will be profitable. So, in general, they think fiscal year 26 is the year when things are going to turn around for the crop health science division of Natco Pharma. So, moving forward, we have another interesting thing. This is on page number 14 of the report. I thought there was something on page number 14, but I don't think there's anything on page number 14. Moving on, page number 15. Okay, they say they're doing very well in the MENA region. Now, MENA refers to Middle East and North Africa region. They think they're doing very well in Canada and Brazil in there too. They had very good launches. All right, so they're doing very well in Middle East, North Africa, and Canada and Brazil, some of the other markets that they're engaged in. They're doing very well in these markets. And now the analyst asks, okay, last quarter they indicated that would make a lot of sense for them to get their manufacturing or distribution base in US, given the current Trump tariff circumstances. So would the acquisition that you're considering be in that direction? And he replies, yes, that's one of the acquisitions we're looking at. So Natco Pharma is seems to be seriously looking at for some new acquisitions because right now they seem to have a lot of cash on hand. And one of the acquisitions seems to be for a manufacturing or distribution base in the US. Some company which engages there. Yes. And this is one of the other things. So this they're talking about their Indian base, the Indian market, the revenue they get from India, which is very small but still important. They say that normally they don't get a lot of growth, but this year they kind of expect to get more growth because of two products, two specific launches. I think this should come up more in the future. We'll look into that. Now, yes, it's important. Okay. Oh, spoilers. Fault. Yes. So the analyst asks that the analyst says that he was going through the segment reporting, and in the crop health division, year on year, the top line has reduced. Even sales have reduced, and obviously the losses have increased. So I think we have a segment loss of around 150 crore this year, which is true. In the crop health division, they had a 150 crore loss. So the optimism in the coming years is based on what? Because historically we have reduced numbers. The analyst is asking that the division is not doing well, So why is he so optimistic? To which Mr. Raveen, sorry, Rajiv, Mr. Rajiv replies that the loss represents the impairment that we have taken. Impairment is a non-cash expense. If you not want to know what impairment means, in accounting, impairment refers to a permanent decline in the value of an asset below its carrying amount in the balance sheet. So when you have an asset, if its value in the market goes below its value currently on the balance sheet, so the decline in that value will be the impairment cost. It's non-cash cost. It may not really affect the cash balances, but it will represent the decline in the asset's value. Represent as the decline in the asset's value. So basically, why is it relevant here? And why was there impairment? Because, well, the division was loss making. That's true, right? The crop health science division was loss making, and the division itself is an asset. So, because of the continued losses in the so many years that it has operated, the accountants, I believe, advised the company to take some impairment of that. Okay, so the loss represents the impairment that we have taken. Let's start with that. And the second is what has happened that they stopped the product 2 years ago. Some of the products they were selling, important products, they stopped selling it. And a lot of that stock came back as returns. So the sales reduction happened because a lot of the products were returned. Not a good thing to look at. So he says it's a new business and it's not a good place to be because it's a new business. It took them a while to figure out how distribution works. How do you manage controls better? How do you make sure that stock is liquidated? So basically, it's taking them time to make money in their business to figure out how it actually works. The things that go in and out of the business, the workings, and they think it's getting better. They're getting better in, of course, managing the business. And because of the returns of the product, they had to take a loss. Now, this is important, but think, sorry, I think it's looking better because if you look at the cash flow, the sale was 60 crores, but they actually had a cash flow of 85 to 90 crores. And he thinks that cash flow is the true indicator of whether you are selling the product. So it seems that the crop health science division contributes a lot to cash flow. I don't know how, but that's a good thing. Cash flow is a good metric, like the most important metric, one of the most important metrics when looking at a business. And a cash flow of 85 to 90 crores, and he thinks it's going to get better. So hopefully, and Natco Farmers management usually does achieve the things like a good extent. It's able to achieve whatever expectations it sets, guidance, growth guidance, benchmarks it sets. It usually does accomplish that. So hopefully this gets accomplished too. Moving on, more agribusiness. Yes. Now, he thinks to build a business in his experience has always taken 4 to 5 years. And sometimes you get lucky and things get turned around in a year or two. And agro is coming in that median of 4 to 5 years timeline. And he thinks that it's not that bad. It's not as bad as it's going to look. And he thinks that the agro business is going to uh, turn around. Now, there's one more thing that I want to show, but I don't know where it is. Some of the things I read and I can't find it, which is a shame. I thought I actually recorded it. Um, okay. I can't really find it. There were two more things that I want to see. Uh, Let me see if I can find it. These are two very good things, but I just can't find it. I thought I had it. How can I lose that? Okay. I found it. I found it. I found it. Yes, I finally found it. Okay, so the base business. Here he says the top. I think the base business should grow around 7 to 10%. What is this base business? As I said earlier, base business refers to Indian business, and it's not grown that well. It's grown like 2 to 5%. So growing around like, sorry, spoilers. Growing around 7 to 10% is a very good thing. And two major launches will drive the core. One is risdiplam, subject of court decision, and of course, semaglutide. Semaglutide, which we are maybe expecting at the end of the financial year. Now, semaglutide is, from what I understand, chemical molecule related to producing Ozempic, that very popular, that recently viral, like past couple of years, that recently viral weight loss drug. So Ozempic needs, I believe, semaglutide, and it's expecting, Natco is expecting to have an Ozempic generic version of Ozempic to be launched in India this year or at the very start of next year. What did they say here? Maybe at the end of the financial year. So that is very good. Semaglutide and risdiplam. So I think that should be it. Um, One more thing I want to say that Natco farmers R&D expenditure, they said they're going to do around that 350 to 400 crore rupees the next year, spending around 8% of revenue ish on R&D. That's one of the things I want to show, but I can't find it. That's my fault. So risdiplam and semaglutide are the major launches they're looking at to grow the business. Next year, they're anticipating a drop in profits and revenue, which is sad. And they're expecting their crop health science division to turn around, which has not done very well for the past few years. So that's it. It was Natco's latest conference call.